So 3 Bitcoin exchanges have just collapsed over the past 3 weeks and nobody even paid attention. And the only people who did notice these exchanges go under, they're now wondering which exchanges are next. We can see AscendX is only one of 3 exchanges that has begun freezing withdrawals. And I do want to explain which one is next. But I want to focus on a more interesting story because exchanges going under like they are today is only one step out of a 5-step process that we are seeing repeating. We saw this exact 5-step framework play out in 2021 and 2022 when Bitcoin was at around $20,000. And you know what they say? Sometimes history doesn't repeat, but it awfully does rhyme. So the first kind of step to this 5-step playbook starts with these exchanges going under. So we actually have some pretty big names and big exchanges that have had to quietly shut down over the past 3 weeks. We can see Bitmart and BitMEX are some of the biggest names that have had to close shop. So we can see Bitmart began winding down on Sunday, 3 days after BitMEX confirmed its own exit. And then a smaller exchange called AscendX also shut down on July 1st, bringing the total number of exchanges closing their doors to 3 in 1 month. This is absolutely fascinating, and everybody's too busy being divided with the infighting inside Bitcoin's newest civil war to even be aware of what is happening. Okay, this is interesting to be very aware of because, again, what is it, like 70 to 80% of people who buy Bitcoin, they buy it and they stick it on an exchange. So let's quickly break down what's happening. We can see BitMEX died of irrelevance despite being in the space for 10 years. They've been fought for the past 6 years by the regulators, and now they have finally bit the dust, so to say. We can see Bitmart gave zero explanation 3 years after a $196 million hack that it never fully recovered from. Again, this is a really interesting warning sign. If you see exchanges getting hacked, typically they don't have the funds to back up those funds that were stolen. And then we can also see that Mikic had a little bit of an impact here. And what's interesting is AscendX, this is a smaller exchange. Their wallets were drained before the announcement, and they only had $26,000 of assets against multi-million-dollar user claims. So they owed their users millions of dollars. They had $26,000 and they just ripped the final $26,000 off the exchanges. And now they've halted withdrawals, and it's been about 3 weeks. And those customer, claims, they are not getting processed. And it doesn't look like they are going to get processed. So again, everybody's wondering what comes next. Is Coinbase, is Binance going to be the next exchange that goes under? I do want to explore that and, what I think might happen next. I think we're also going to be looking at the concentration risk that typically happens in bear markets. But I want to look at the market impact first because I found this chart and it's kind of interesting. You can see every bottom that we see in Bitcoin is marked by an exchange going under. In 2014, it was Mt. Gox. In 2016, it was a Bitfinex hack that saw 119,000 Bitcoin lost. That is a lot of Bitcoin. We can see in 2019, we saw an exchange called BitGrail. This was a hack. We can also see, obviously, 2022, we had the FTX collapse. And now in mid-2025, we've got BitMEX as well as those 2 other exchanges going under. But this isn't the full story. I don't think this is just an exchange story because exchanges are only one part of the pie. As you're going to see, some other similarities always happen when Bitcoin's down 50%. And that is right now we are watching, see step 2 of this framework, is the Bitcoin Treasury company collapse. We are watching some of the biggest treasury companies in the space close up shop and say, we're out, we're over, we are moving on to the next thing. So obviously 21 Capital has not closed up, but we did see the CEO Jack Mallers step down recently. This is one of the biggest treasury companies in the space. We also had Strategy selling Bitcoin in pretty big size more recently. And the similarity that this has to 2022 is Strategy first sold Bitcoin in like November 2022. Right when Bitcoin was at about, what, $18,000 a coin. And now they're selling again for the first time in 4 years. Kind of super interesting. We can also see another treasury company called Satsuma sold all of their Bitcoin recently, but they weren't the only UK Bitcoin treasury company to sell all their coins. We also saw Smarter Web Company. We can see here, they sold 177 Bitcoin recently to pay back $11.7 million of convertible debt instruments. Very interesting. So we saw Satsuma, we saw Smarter Web Company, we saw 21 Capital lose their CEO. They now have a new CEO who's going to take over the company. And we've obviously seen all of the other companies in the Bitcoin treasury space see something similar. And this is, once again, another process that we see when we start to discover what is the real price of Bitcoin. Because to really exhaust the sellers, everybody sells. Again, everybody focuses on, oh, okay, Saylor sold in 2022. That was the capitulation bottom, but it wasn't just Saylor. It was Saylor selling. It was exchanges like FTX blowing up. And it was a couple of the other processes that you also see at the bottoms of these bear markets. So that is kind of like step two that we typically see in these capitulation events. Now, what's something else? What is another step or process that you see when you start to see Bitcoin price start doing unexpected things? That's what I'll say for this live stream. You typically see pivots, and you see some of the biggest names in the space unexpectedly change their opinions all of a sudden. So this is kind of interesting. I want to play you what I think is some very interesting videos that I found. Well, I've got one from Stanley Druckenmiller and another one from Chamath Palihapitiya. Hope I didn't butcher that name. These are both two very influential investors. They're not just billionaires, they're multi-billionaires, and they have a really interesting track record for predicting the future, meaning that what these people say, people listen to. People listen to respected institutions. When BlackRock in 2022 was saying that Bitcoin's not ESG friendly enough, people listen to that very clearly. And like today, we've got billionaires saying, look, and think about Elon Musk, for example. In 2021, Elon Musk bought a ton of Bitcoin. He put it on the balance sheet of Tesla. He said, I'm going to accept your Bitcoin for payment for a Tesla in 2021. What happened? The market moved $10,000 in a day. And weeks later, unexpectedly, Elon kind of reversed back what he said. And he said, well, actually, I've been told that Bitcoin's energy usage is a little bit too dirty. So I'm going to stop accepting Bitcoin for payment. And that's that. I'm not going to sell my Bitcoin yet, though. So when you see billionaires make unexpected pivots, this is where you need to start paying attention. Now, I'm going to show you the first of these unexpected pivots. Let's start with Chamath.
But Bitcoin and things like it is the equivalent of the red pill, okay? We are entering a completely world of uncharted water right now.
Have you made any investments in Bitcoin?
So, I mean, I personally, I own Bitcoin in my hedge fund. I own Bitcoin in my fund. I own Bitcoin in my private account. It is a huge deal. It's a huge deal. Because what you're talking about right now is for the next 3 to 5 years, an unbelievably better store value. It is gold 2.0, right? The value of gold that hedges the world economy about $9 trillion, right? 1,300 an ounce, of which only $100 to $150 is the actual production value. So all the rest of it is imputed, where, Lena, you and I have decided that it's worth 1,300 an ounce. Well, guess what? I can do the same thing with Bitcoin, except now I can do it outside the purview of every single government. It's being used everywhere where you would think it would be used. Russia, Iran, Iraq, Egypt, Venezuela, Argentina, everywhere where you have currency pressure, everywhere where you want to basically shield your assets. And then after that, it'll probably become a payment mechanism. So in all of these three industries, you're talking about trillions of dollars up for grabs. Up for grabs, right? And it's just about trying something.
Right.
And taking a few months to understand what the opportunity is and then hit the scene.
So I think you guys can read between the lines. Chamath in 2013 was incredibly bullish on Bitcoin. He didn't mince his words. He said it's going to be a huge deal. It's infinitely better than gold. But now I want you to listen to just how dramatically his tone has changed in March of 2026. Again, keep that month in the back of your mind because I'm going to come back to why we saw this interesting pivot in March 2026. But listening to what Chamath said about Bitcoin this year.
Heads around. The structural failing is that I think the reality is that Bitcoin, for the most part at this point, there's a structural failing in Bitcoin that I think people will need to come and wrap their heads around. The structural failing is that it is not. So if you think about like what is the value maximizing function right now for a crypto asset to be broadly adopted, it needs to have the features that allow a central bank to adopt it. And there are two things that it lacks. One is fungibility and two is privacy. And so Bitcoin fails on those two dimensions. So it can never be a structural holding of a central bank. Mm-hmm. And that simple thing will keep it in the realm of ETFs and humans. And
does gold satisfy those conditions?
Yeah.
Fungibility, but not easily.
Both. You have no idea how much the Bank of China owns. You don't know how many ounces they own. You don't know how many ounces I own. When there's a public ledger that says this address has this much, and you can't really trade it because you know the history and the provenance of that exact token. It's been used to buy this. It was transacted over here. It went to this wallet. That lack of fungibility and privacy is a huge deterrent for broad structural adoption. That's what you need to then add another 10x of market cap. Mm-hmm. So is there room for a different crypto asset that solves for the privacy and fungibility? Yeah. And are there projects right now? Yes, but they're very small scale. There's huge issues with them. Those are even more volatile. So Bitcoin's interesting.
So there's two reasons for why I think we're seeing the Chamath pivot. The first is there's something deeper, darker, and more coordinated about all of the billionaires I'm about to show you who have changed their Bitcoin stance in the past few months. Or it just could be, simple Occam's razor. We've all seen Chamath tweeting about Zcash and all of these, Silicon Valley tech elites and smart investors like Naval, for example, have all been talking about Zcash. Maybe there's some sort of coordinated pump and dump. I don't know why they're all changing their tunes on Bitcoin. But I think the fact that you're seeing lots of other billionaires also change their tune on Bitcoin at the same time, it's interesting. I'm going to play you another pivot, but I want to caveat this pivot by just reminding you just how pivotally important Stanley Druckenmiller is. He is, if I pull up the article here, Stanley is friends with Scott Bessent and Mr. Warsh, the new Federal Reserve Chair. Think about that for a moment. This is an article written in Feb 2026. The Druckenmiller Connection. Meet the man behind Scott Bessent, Treasury Secretary, and Kevin Warsh. I'm showing you this connection because it's really important to keep in the back of your mind the contexts and the background and the perspectives that this person might have when you start to weigh why they're saying things that they're saying when they're saying things that they're saying. Now, I'm not going to play you the video, but I am going to just show you this so we can see in 2022, Stanley Druckenmiller, massive fan of gold and Bitcoin. He said, if I think we're going to have an inflationary bull market, I'd want to own Bitcoin more than gold. This is, again, 2022. This is another clip from 2022 and Stanley Druckenmiller. He said, Young people look at Bitcoin as a store of value. It's a brand. I like it. I don't own any, but I should. And this was in October 2023 at the depths of the bear market. And look at who's interviewing him. This is Paul Tudor Jones, the man who started the Bitcoin is the fastest horse narrative in 2020 when the money printers got turned on. All of the experts told you there will not be inflation, don't worry. But of course, we saw a lot of inflation. Prices for everything are up by 50 to 60% since 2020. We had that inflationary bull run, and Bitcoin was the fastest horse. Again, when Paul Tudor Jones wrote that thesis back in 2020, Bitcoin was $6,000 a coin. Now we're at $60,000 a coin, and people think it's going to zero. We're an order of magnitude higher. So Stanley Druckenmiller was a bull on Bitcoin 4 years ago. That's what I'm trying to show you here. But look at what he said more recently. This is incredibly interesting because this came in the second week of March. Just keep that date in the back of your mind as we go through today's video.
It's a solution looking for a problem. I'm very sad that it ever happened as a store of value because it wasn't needed, but it's a brand and these people love it, so it's going to be a store of value. On the other hand, blockchain and the use of stable coins, if you want to throw crypto into that, tokens, incredibly useful in terms of productivity. I assume our whole payment systems will be stable coins in 10 or 15 years. Efficient, quicker, cheaper.
Boy, look at the pivot there. He's sad that Bitcoin ever happened. Didn't he also say the entire monetary system is going to be backed by stable coins? And again, this is the man behind Kevin Warsh, Fed chair, and the Treasury secretary, big old Scotty Bessent. Now, look at the date of when this clip was on Twitter. Oh, sorry, this is the wrong clip. The clip I want to show you is this one here. When Stanley Druckenmiller changed his mind on Bitcoin, March 14th, 2026. Now, what else happened on that second week of March, 2026? I'll remind you of the 34-page report that the US Treasury wrote. You can see this is the report. This is a report to Congress from the Secretary of the Treasury, Scott Bessent, on innovative technologies to counter illicit finance involving digital assets. Look at the date, March 2026. And I believe from memory, this was like to the day, nearly on like the 13th of March, like a day before Stanley Druckenmiller comes out and says that stable coins are going to run the monetary system. Now, for everyone who is a subscriber of this channel, you've seen the deep dives we've done on this report. As you can see, digital IDs were mentioned 75 times in this report. 75. Look at them all. This is insanity. And what else was mentioned in this report? A new controversial law called a hold law. You can see it here. Congress should consider enacting a digital asset-specific hold law that gives exchanges the ability to freeze people's funds. Again, if you're a subscriber of the channel, you saw the deep dive we did on this video. If you're not a subscriber of the channel, make sure you subscribe to get notified when we do drop these deep dives. Because as you can see, they all kind of get connected. So the question here is, why are we seeing the billionaires change their mind on Bitcoin now in 2026? And why do we see it happen in a wave? Wherever we're in a downturn in Bitcoin, every time the price pops up a little bit, you see a new wave of attackers. So of course we know that we saw, this is March, by the way. This is like the April-March timeline, 2026. Bitcoin hit 60K in Feb. We rallied back to about 75. Boom. Guess what happened? Coordinated FUD. Chamath, Palahapitiya. We saw Scott Bessent write this strangely worded report. And then we have other billionaires like Stanley Druckenmiller, someone who's respected as one of the best investors of all time, all come out and attack Bitcoin. But what's interesting is we're now starting to see all of the potential sellers and narrative destroyers all capitulate. Go through the list. Look at the 5 entities here. Who are they? They've all capitulated now. And these exchanges capitulating last month when we saw 3 exchanges capitulate in 3 weeks, this is nearly like the final domino that has fallen. So you can see and again, I want to talk about the banks more in a moment. But again, as you're seeing these exchanges drop, look what you always see. They've frozen automated withdrawals. And look at how long people have been waiting to get their Bitcoin out of the exchange. So I want to read this little section because it's very important to be aware of, especially for anybody still stuck with money on either Binance or Coinbase or another one of these big exchanges thinking, there's no way I can get my money frozen. Oh, well, you certainly can. Take a look at this. So we can see automated withdrawals are paused. All requests are now subject to a manual review covering KYC, AML, sanctions checks, fraud prevention, and balance reconciliation, AscendX has said. The company said it is not in a position to give assurances about timing or amounts and that withdrawals may be delayed, blocked pending further information, or not processed at all while the review continues. They also went on to say it had relied on an agreed strategic transaction that was to provide liquidity to grow the platform and that the unnamed counterparty did not perform, compounded by broader crypto market conditions. So you can see by the sounds of it, this exchange was leveraged. They were hoping that the price of Bitcoin was going to go up. They needed the price of Bitcoin to go up. Isn't that something very similar to what we've seen in the Treasury company space? This is also kind of what we've seen with the Bitcoin miners. We've seen an array of Bitcoin miners do exactly what this article headline is talking about. Bitcoin Treasury companies sell up, repay debt, and they're pivoting to AI as their share prices collapse. That's what we've seen a lot of in the Bitcoin miner space. Let me actually show you some of the bigger Bitcoin Treasury companies just to show you what's happening and why even a company with 1,000 coins selling all of it and going belly up is kind of super interesting. Because if you look at who is left, who are the Treasury companies that are left? Strategy's number 1 and they're selling. Is there many of these actively accumulating Bitcoin? I haven't seen Metaplanet actively accumulate any Bitcoin for some time. We can also see who else is on this list. Marathon, didn't they also sell some Bitcoin a while ago? Let's click on it. Let's find out. So by the looks of it, Marathon has sold about 20% of their stack. So you can see they had about 53,000 Bitcoin at their peak. Now they're with 36,000 Bitcoin. And the trend is very similar. You're seeing capitulation across the board. And you're seeing the attack that was started in 2025 with massive Wall Street banks like Jane Street and JP Morgan. This kind of 9-month attack is now beginning to look as if we are reaching some sort of a crescendo. And I want to explain what comes next in a little bit more detail in a moment. But again, if you are somebody with funds on an exchange hoping, there's no way that Coinbase could go under or a Binance could go under. Let's not forget, what were some of those 3 exchanges that went under over the past 3 weeks? What did they have in common? Many of them were affected by that new Mikic rule that went into effect on July 1st. If you've got 20% of your customers in Europe and you're all of a sudden saying, sorry, you can't operate in Europe, that's a big hit to the balance sheet. And you've got to also think, these companies, they're interconnected. This is what we saw in 2022. We saw Luna go down first. Then we saw BlockFi, FTX, Celsius. It was a domino effect. That's because they were all holding funds on each other's platforms. They were all invested in each other's things. And this is also very true. BlackRock uses Coinbase. I'm not 100% sure on this, but doesn't Michael Saylor hold some Bitcoin at Coinbase custody? I'm not 100% sure of that, but a lot of these big public treasury companies, they don't hold the Bitcoin themselves. They use a lot of these other companies. So there's a lot of intermingling. I believe the only ETF that self-custodies its Bitcoin is what Super Cycle Steve said in the chat, and that's Fidelity. I know Fidelity holds their own Bitcoin. I think they might do proof of reserves. But the takeaway here is we don't know what's going to happen next, but you're kind of seeing the smoke kind of emerge out of the tree line, so to say. We can see that there is a fire, and if you've got Bitcoin on exchange, really bad time to be having that. That's why I always encourage you guys to put your Bitcoin on one of these. This is a BitKey hardware wallet. I think it's the cleanest, easiest to use hardware wallet in the Bitcoin space. They have built-in multi-signature by design. I really love that about them. They also have built-in inheritance planning. I think it's an absolute no-brainer. If you do want to get your hands on the new BitKey, you can get a 10% discount if you use the link down below and you use a promo code Luke. That's Luke. You can see when you go through checkout and you put in that promo code, you will get a 10% discount on your order. Again, self-custody is the key to fight back against what I believe is a little bit of a coordinated unwinding that we always see. It's a cleansing, it's an unwinding, and we see them in bear markets. This is nothing new for Bitcoin, as you're about to see, because I want to draw the similarities to what happened in 2021 and 2022. Who remembers that? So in 2022, in May, we saw articles like these being published by the World Economic Forum. Have a look at this. Who remembers this? Can cryptocurrencies become friendlier to people and the planet? How cringe is that title? Of course, it's the World Economic Forum. I would not expect any less coming from our authoritarian tyrants over there at the World Economic Forum. But they started infiltrating the space. They started saying the crypto industry recognizes it has an ESG problem. You can see this wasn't just a one-off article. In March 2022, why the debate about crypto's energy consumption is flawed. It's flawed, but not in the way that we hoped it would be flawed. So again, this is kind of like the 5-step similarities I want you to be aware of is to get a true capitulation in the space. You typically see every actor in the space flip, pivot, get bearish, and capitulate. And this is kind of like the signal here, because once everybody's sold, once every big name has flipped bearish on Bitcoin, that is typically where we reverse. And that reversal happens quicker than most people think. To show you why that is true, I want to take you back to 2022. Who remembers just how quickly Bitcoin reversed out of that bear market? A lot of people were saying, oh, you know, you're going to get a long time. You're going to get a lot of chances to buy Bitcoin under $20,000 when it went under $20,000. But look at how quickly we reversed out of there. Once Bitcoin got above $17,000 on the 12th of Jan, we were at $23,000 on the 22nd of Jan. 9 days later, you can see all of the bears like Ben Cohen, who were bear posting, predicting $12,000 Bitcoin. They missed the 40% pump. And this came in 9 days. Bitcoin went from 17 to 25. You can see 38% rip. I hope I was sharing my screen. Now, I'm not saying the same thing's going to happen in the next 9 days, but what I am saying is when sentiment is most bearish, it is most negative, when all of the bears have sold, that is when you see upside. And just to put things into perspective, if the 22 bear market repeated and Bitcoin ripped 38% in 9 days, that would put us at $87,000. And we're at 63 right now, and most people think it's over. Okay, this is why we always say on this channel, selling in a bear market is an absolutely terrible idea. You should never, ever, ever be selling in a bear market. You should be buying more. You should be doing everything you can to not let grip of your precious Bitcoin. Bitcoin is the thing you want to be holding in 5 years. As we say, in 5 years, there's going to be people who hold Bitcoin in their own self-custody, and then there's going to be everybody else. Everybody who ever trusted, maybe they had all their net worth in this paper money, or maybe people who trusted a company like an iBit or an MSTR, and they get eventually rugged because they had a paper promise. Again, if you don't want to sell your Bitcoin, if you got bills, maybe a way you can get through that is by borrowing against your Bitcoin. I think Ledn is the best place to borrow against your Bitcoin. They're a partner of the show. They're going to give you a discount on the fees on your first loan if you use the link down below in the description. And they've got the lowest rates in the space. They've processed over $11 billion worth of loans. And they're the go-to for anybody looking to borrow against their Bitcoin. They even do proof of reserves. Again, why did BlockFi, Celsius, and FTX all blow up in 2022? There was no transparency. There was no proof of reserves. Ledn has fixed that problem. And All Night Hider's even fixed the problem for you guys as well, because he's put the link in the live chat for you guys looking to borrow against your Bitcoin. And All Night Hider makes a great point. Complete the Bitcoin thesis with self-custody. If you don't hold your Bitcoin yourself, you are at the whims of a JP Morgan, a Larry Fink, or a BlackRock, okay? And again, let's talk a little bit more about someone we haven't talked about in this attack, and that is the banks. What's very different about 2026 to 2022 is in 2022, the banks were ignoring Bitcoin the best they could. This time round, the banks have already, I can't say that, the banks have already kind of played their cards. Again, this price collapse and manipulation, this started with the banks. Who remembers the 10 a.m. dumps that we could see from Jane Street? Bitcoin price rallies as Jane Street trading draws attention. This wasn't just a Twitter conspiracy theory. This is Yahoo Finance writing articles on Jane Street slamming the price of Bitcoin every 10 a.m. But of course, JP Morgan contributed to this FUD by saying that MSTR was going to get delisted when it obviously was not. But they were spreading FUD to make sure that the launch of their product went smoothly. Who remembers this? This is an article from November. This was the beginning of the attempted control of the Bitcoin price. That's what it was. We can see who remembers everybody on Twitter saying boycott JP Morgan after they called for MicroStrategy's stock to be delisted from all of these indices. JP Morgan said they're going to get delisted from the MSCI in January. It was all FUD. It was all bullshit. It was all lies. It was all fear. I like this article. JP Morgan's manipulation of MicroStrategy is way beyond you think. And again, we're not going to rehash that entire story today for you. The takeaway, the promising takeaway, is there is no more entities to come out, attack the Bitcoin price, and manipulate it lower. And what's really interesting, this is just an observation, but if you look at Bitcoin over the past, let's call that 8 weeks, since July 1st, when we dipped under $58,000, we've seen so many bearish headlines. The Strait of Hormuz is closed. Bitcoin rallies. Sailors selling more Bitcoin. Here, Bitcoin rallies. More exchanges are collapsing. Bitcoin's holding up. You know what they say? when bad news can't push an asset down in a bear market, that is typically the end of the bear market. It's the same as a bull market. No amount of negative news can push an asset down when it's in a bull market. Now, I'm not saying the Bitcoin bear market is definitively over. It's my base case that it is. I'm not saying it's impossible that we go lower. It's a chance. Everything's a possibility. But for me, I think it's far more likely that we are much closer to a bottom. And I will eat all of the humble pie in the world if we set another low in October, like all of the 4-year candlestick astrologists are predicting. Because they're not buying yet. They say, nah, we got to go lower. We topped in October 2025. We won't bottom until 12 months later because of our magic astrology calendar. But I will remind you, that is incredibly dangerous to do. Especially when we know this about Bitcoin. Who remembers what Bitcoin's best 10 days do each year? All of Bitcoin's gains come in its best 10 days. This is the chart I always remind you guys of and why it's always a terrible idea to own 0 Bitcoin. Again, even if you're trading your Bitcoin, you absolutely should not, but you should never own 0 of it. This chart explains why. Because Bitcoin's best 10 days each year outperform the other 355 days by an order of magnitude. So that means that you are sidelined, you are wrecked. This goes back to the famous quote, trying to time the market is a really bad idea. You just need to spend time in the market. And that's what these big purple bars on this chart show. Time in the market always outcompetes trying to time it. And again, that should be step 1 of your Bitcoin thesis. Step 2 should be taking self-custody. You should never be trusting someone as untrustworthy as Larry Fink with your Bitcoin. If you need help putting your Bitcoin in a hardware wallet, I always recommend you reach out to my friends at the Bitcoin Way. They have decades of experience in the cybersecurity space, and they can help you take self-custody of your Bitcoin so that you don't have to trust a Larry Fink or a BlackRock. Again, you can book a free 30-minute consultation with the link down below. They are a partner of the channel, and they do provide a service. Again, if you want to fight back in Bitcoin civil war, and if you do want to run a node, they can also help you do that. And while we're talking about taking self-custody of our Bitcoin, I'd remind you once again, you should never have your Bitcoin 12 or 24 word seed phrase written down on paper. I love Stampseed because they help you punch your Bitcoin 12 or 24 words into these titanium plates. They've got a brand new website. They have simple, easy to use stamping kits for you guys to put your Bitcoin generational wealth where it deserves to go. Again, you can get that 15% discount if you use a promo code Luke15. And hopefully you will complete the Bitcoin self-custody thesis. All Night Hiders also slapped links in the chats for you guys as well. I don't think Bitcoin's going to $20,000. The only people who think that is Mike McGlone. I just wouldn't be trusting Larry Fink and BlackRock with my Bitcoin. Again, Larry Fink is the current co-chair of the World Economic Forum, and he holds 4% of the Bitcoin supply. Astounding that 800,000 Bitcoin are with that guy. Terrible idea. And this is the takeaway here. I think they're losing control, Jenny. They cannot keep the price of Bitcoin down forever, which is why I'm bullish. And on that bullish note, I might end this stream here. Wish you all a happy Tuesday.